Don't buy Bitcoin with debt. Don't buy crypto with debt. Don't take on a loan to buy stocks. Don't do any of those stupid things. It might get out of hand. Now that's what you hear many people saying. And I do disagree. I don't think it's a bad idea to take on a loan to buy Bitcoin. This is a very controversial take, but hear me out. The things that are common that most people do and the things that actually make sense from a fundamental perspective, they are not the same. It is very well accepted to take on credit card debt. It is very well accepted to buy a TV on a loan. It is even more accepted to buy a car on a loan. And we all know how cars depreciate over time. Now let's say you are financially savvy and you don't do that. You only have a loan on your house. So you take on debt on an asset that over the long term appreciates versus fiat currencies. Now that position might be even more risky than taking on a personal loan and buying Bitcoin with it. Let's say you buy a house and let's say you pay down 20%. 20% your equity, 80% from a bank finance. Now what's the kind of price risk you face here? Property prices can easily drop 20%. They can even drop 30%, 40%. And that's in aggregate the entire market. Your specific house might even be doing worse because maybe you buy a house where afterwards a lot of additional supply gets built next to it. Or maybe you buy a house that today is hip, but where then a lot of people move away. Maybe the taxes aren't that great anymore. Maybe the local industry has left. Whatever it is, right? You take on, besides the market risk, also the idiosyncratic risk of your house, of your specific asset. But let's, for simplification, say you only have the overall market risk. 20% is paid down. If the housing market now drops by 20%, you have lost all of your equity. The price volatility on your equity is huge. It's so bad it can even go into the negatives. And if you cannot serve the loan when you are in the negatives, then you are in big trouble. Then you are in forced foreclosure. Let's also compare the typical sums, right? You pay down 20%, you borrow 80%. Those 80% could be 5 years, maybe 10 years of your annual income. You've got 10 years worth of income in debt. Do you see how risky this is, right? Interest rates can rise, and they did rise. The whole thing might not play out, but it's a super common thing to do. And I'm not even pushing against that specific investment, because why does it still make sense to do something like this? Because of the long time horizon. You hold your house maybe over 10 years, maybe over 20 years. And then all the fluctuation that comes from a recession or from a boom, all these ups and downs, they get cancelled out if you simply just wait for long enough. And people hold houses for long enough. Now compare this to buying Bitcoin with a personal loan. So let's say you take half of your year's income, personal loan, against your regular cash flows, be it a salary for example, and you buy Bitcoin with it today. You also have fluctuation. Bitcoin can go down 70 or 80% easily. If you buy it really at the wrong time, then those busts can happen. On a relative scale, this is already less than for your down payment for the house. On an absolute scale, in terms of US dollars, it's also less because you're not going to borrow 10 years worth of your annual income, right? You can't take such a personal loan. So in terms of percentage, it's lower. In terms of US dollars, it's lower. Why would it really be more risky than taking a loan for a house? The point is, I think it is not more risky. It is less risky. The only thing that you have to ensure is that you have similar kinds of time horizons for your Bitcoin investment that you also have for your house or for your stock portfolio. And this is where most people fail. When you get a price for something every day, you're looking at, are you up or are you down? Then you're more inclined to trade. And when you see those waves and when you think, oh, if I just sold at the top and bought back down on the bottom, then I would now have 4 times the Bitcoin. If you make these mental gymnastics, of course, you might end up selling at a loss and you might do something that you would not be doing with your property investment. So what's the takeaway here? The more risk you take on in terms of your personal allocation, so for example, as a percentage of your overall wealth, or even in terms of allocating future cash flows with a personal loan, the more personal risks you take on, the less you can afford to speculate, the less you can trust your instincts to ride those waves. Speculating and riding waves is reserved for speculative money, for money that you can spare, for money that you can potentially lose. But there is a place for allocating large sums of personal wealth for the very long term in solid assets. Assets that don't deflate, in assets that grow in adoption. If that's in some actually the case for property is another discussion, right? Urbanization is slowing down, demographics are pretty poor. For Bitcoin, we can definitely say that it grows in adoption. The number of wallets that hold at least one Bitcoin is growing steadily. It's currently at 1 million wallets. You also see that the percent of Bitcoin that haven't moved in the last year are at an all-time high. It's now at 69%. We see all these adoption metrics. We can believe in the long term of Bitcoin. Bitcoin will recover. Bitcoin inflates less than fiat. So really, this is controversial, but I think it's completely warranted. I've done this myself. 3 years ago, I took on a personal loan to balance out my portfolio. I didn't directly buy Bitcoin with it, but I did buy stocks with it because my Bitcoin went up that much. I suddenly had an over allocation to Bitcoin and I didn't want to sell it because we are still rising. So in order to simply just balance it out, I took a personal loan and bought stock ETFs with it. I bought the QQQ so that in the end, I was balanced with my Bitcoin exposure versus my stock exposure. So you want to be balancing out the ups and downs in a portfolio because still across asset classes, there isn't yet as much correlation, right? When Bitcoin goes up, it doesn't necessarily mean that stocks are going up and vice versa. Don't take on more risk than you can digest. I agree with this. Don't go to the bank, borrow all money you can and put it on Pepe coin. But if you can afford the monthly payments and you stick with something very safe, and I'd argue Bitcoin is the safest of the cryptos, then why not do this? If you have the risk tolerance for buying a house, you should have the risk tolerance to do something like this for Bitcoin as well. From a mathematical standpoint, it's not more risky. It just feels more risky because everybody tells you not to do this. But just look at the numbers. Your wealth will not fluctuate as much with that Bitcoin position compared to your house. Just make sure you can serve the payments and you've got cash flow that's stable. Feel free to argue with me about this either in the comments here in YouTube, or you can also join our Telegram channel, Bitcoin Strategy channel. Simply search for this within the Telegram app. I hang around there regularly. Looking forward to see you over there. Bye-bye.